Hello and welcome. It's still the TGIF trade right here. The first trading week of November. This is the last one. Here's what's coming up today. Nigeria's fintech sector is booming, but can it sustain the pace? We explore what it takes to build scalable fintech systems that can compete globally. As Zimbabwe's economy is showing surprising strength, the IMF says the country's 2025 rebound is stronger than expected. Well, Tanzania steps up its clean energy drive as the government expands investments in solar power projects nationwide. And it's great to have you join us. I'm Laddie Williams. Let's get a quick check on what's playing out with commodity markets now. We're seeing oil there continuing with strength from the morning gains there, 1.36%. Brent crude, $64.24 a barrel. Even though it's tending to a weekly loss, for oil, we're seeing this Friday trade there in the green firmly, 1.48%. WTI crude, $60.34 a barrel, and definitely the benchmarks have lost by 1.7 and 2%. Respectively, in the last, trading session. The losses on Thursday came as the International Energy Agency said in its monthly report that world oil supply would rise more rapidly than expected this year due to planned output increases by the Organization of Petroleum Exporting Countries, and allies like Russia, a group known as OPEC+. And we're seeing more impact there, but it's green, but it's still going to be a red week there for the oil market. Let's get a check on metals market now. We'll see gold. That rose today as the dollar slid after U.S. private sector job reports signaled weakness in the country's labor markets and lifted expectations of another U.S. interest rate cut, while a prolonged government shutdown. That's also boosted the safe haven demand there. Still below $4,000. Spot gold 0.4%, up $3,994 per ounce. U.S. gold futures, that's at 4,000, smack on there, 0.3% up. But spot silver in a different direction, 0.7% down, still not cracked the $50 level yet. Platinum 0.3%, $1,379 per ounce, and palladium, that's firmly down, $1,534 there. The U.S. economy shared jobs in October amid losses in the government and retail sectors, while cost-cutting measures and the adoption of artificial intelligence by businesses, led to a surge in announced layoffs. That's according to data yesterday, and that's why we're seeing the impact there. But the safe haven metal, gold, that's up right there today, and but we're set for a weekly loss about 0.7%. That's for spot silver there. To other stories now, let's see what's happening in East Africa. We see the Tanzanian government have announced plans to scale up investments in solar power projects as part of its broader strategy to boost renewable energy generation and ensure universal access to electricity. Speaking during a renewable energy forum in Dodoma, the Minister of Energy, that's January Makamba, said the government is prioritizing solar infrastructure developments to meet rising energy demand, particularly in the rural and off-grid communities. Mr. Makamba noted that the initiative aligns with Tanzania's Vision 2025 and its commitments to achieving sustainable energy transition. Revealed that the several new solar projects are underway in collaboration with international development partners and private investors aimed at adding hundreds of megawatts of clean energy to the national grid. So that's the big news there, right there in Tanzania. And to other stories now, we see the International Monetary Fund. They projected a stronger than expected economic rebound for Zimbabwe in 2025, citing improved agricultural output, mining performance, and policy reforms that have boosted investor confidence. In its latest review report, the IMF noted that Zimbabwe's real GDP growth is now expected to surpass earlier forecasts, driven by robust recovery in key productive sectors and improved foreign currency inflows. The fund also highlighted the government's efforts to stabilize the exchange rate, curb inflation, and promote fiscal discipline as key factors supporting the rebound. All right, now to our first conversation. Nigeria's fintech ecosystem has become one of Africa's most dynamic innovation hubs, attracting global investors and reshaping how millions access financial services. But as the industry expands, attention is shifting from rapid growth to sustainability. How can these platforms scale efficiently while maintaining resilience, security, and inclusion? Well, join us for this conversation now. We have Okochi Zoe-Grace, a senior software engineer, joining me via Zoom from the UK. Great to have you. Good afternoon.
Yeah, thanks for having me.
Fantastic. So what would you say are the biggest challenges, fintech companies face when trying to build systems that can scale, sustainably in Nigeria's fast-changing market?
Yeah, I would say the three main challenges. There are three main challenges, yeah. The first is infrastructure, right? We have problem with internet connectivity. We have power issues, right? We have cost of building of infrastructure. Cloud systems are very expensive because we get to pay them in foreign currencies, in USD. Infrastructure is a big problem for building scalable systems in the fintech space right now. Second issue would say security. Because if you're building a fintech, right, you're going to be holding people's money. You're going to ensure that transferring money is safe and secure. Ensure that only authenticated users can access your system. So security is one very big issue. It's both a tech issue and also a compliance issue. You have to ensure that, of course, that your users that are coming into your platform can be assured that your system is safe. And also you have to ensure that the people you're onboarding into your system are actually there for the right reasons. So security is one very big aspect in the tech space. The next is compliance. In Nigeria right now, compliance is a very big issue in the fintech space. For example, if I want to send money, if I want to build a system that sends money to the US, for example, I have to deal with the compliance in Nigeria. I also deal with the compliance in the US. So those different compliance requirements for the different banking systems, right, can bring a whole complication, right, can cause the fintech system to be a bit complicated. So those three main issues, right?
And yeah. I guess also for most of these fintechs that are also trying to do business, expand, into other countries, definitely regulation is a big issue. But how can improved, leadership, diversity, in terms of, gender, background and expertise, how can that strengthen, innovation and decision-making, across most of these fintech ecosystems?
Okay. Of course. Yeah, how can it improve the fintech ecosystem? It's very important for us to have. Sorry, I didn't get.
Right. Yeah. I was talking about leadership diversity, because most of these fintechs, we've heard complaints that some of them, when they're women-led fintechs, they don't get the kind of funding, their male counterparts get. So what do you think should be the balance here? Because all of them can be owned by, male founders.
Oh, yeah, of course. I actually believe that, yeah, of course, if you look around, we have a lot of female leaders in the fintech space right now killing it. We have Piggyvest, right, run by a woman. We have a lot of leaders that are females and are actually killing it in the fintech space. So if we overlook the whole gender bias and just open up and ensure that women also have access to funding and leadership in the fintech space, I actually believe that we are going to move from being a growing and ensure that we are global, right? So bypassing the whole gender inequalities and just ensuring that women have access to the same right funding that men have to would also ensure that.
All right.
Yeah.
Okay, definitely. We did get reports from the big deal there that, again, big raises, for most of the fintechs in the month of October. Thank you so much for joining us Okuchi Uzoigwe is a senior software engineer. Thanks so much for coming on the show today.
Yeah, thank you for having me.
All right, let's get a quick check on what's playing out with the markets that we track now. We see the NGX losing the 150K level at intraday, down about 0.08%. There you have it. Yeah, so it's no more 150,000. It's now 149,902. Quite interesting. We started the week at about 154,000. So we see the big sell-offs right there in the market. And we have some insider trading data right there that was posted on the NGX. We see for likes of Dangote Sugar, Zenith Bank, United Capital. Looking at the data there, we see Dangote Sugar Refinery, Zenith Bank, United Capital. They announced recent share dealings by their respective insiders there, according to regulatory filings. That's on the NGX. According to those filings, we see the likes of Dangote Sugar there, Mrs. Yemi Ayeni. She's a non-executive director there. She purchased 180,000 units of that share there at the average price of 55 naira 60 kobo, according to that earning there. Then Zenith Bank, Mr. Chuk Simaoko, there's a non-executive director. He purchased 173,038 of those shares at 62 naira 8 kobo. Then we see for United Capital, that's UCAP, Mr. Ahmed S. Dewale there, the team lead operations. He did sell 111,084 units of the shares there at 18 naira 30 kobo. And definitely investors use most of this data to gauge sentiments by the directors about their own company and shares there. So this is the latest one there, right there on the NGX. As an investor, you decide how you use this data there. But let's go back to the African continent now. Let's see other parts, how they're looking there. For the EGX, big 2.09% close yesterday. That's close today. For trading, the Nairobi Stock Exchange, a big 1.59% jump there, 192 points. This is also new highs for the Nairobi Stock Exchange. I guess 200 points. That's the next target at this point. Let's get a check on the Middle Eastern markets now, starting with the UAE. That's still trading. Dubai Index 0.12% up, 6,029 points. Abu Dhabi Index 10,052. 0.29%, that's the intraday trade, and other Gulf regions that are closed. But yeah, we did see the Saudi exchanges, Tadawul 0.41% to close yesterday. The Qatari Index 11,058, 0.48% up there. That's also closed there. If you're looking at Saudi Arabia and the Qatari Index. For the U.S. stock futures, they moved slightly higher yesterday after a pullback in markets. The market's biggest technology names led to a losing session for U.S. equities there. And we see the futures tied to the Dow Jones Industrial Average 0.84% down. S&P futures 1.12. Nasdaq, the tech-heavy Nasdaq 1.90% down. So that's given direction, on what to expect for the trade today. Key artificial intelligence leaders, they lost steam yesterday with names such as NVIDIA, Advanced Micro Devices, Tesla, Microsoft posting significant declines, that weighed on the broader market. Let's hear more now from our correspondent, Maria Bird, for yesterday's trade.
The U.S. stock market had a steep fall on Thursday as the Dow Jones was down at 0.8%, the S&P 500 down at 1.1%, and the heavy tech Nasdaq led the way at nearly 2% down, as big tech had many challenges over the day. It is also clear that investors were watching private jobs data, which showed a slowing down in the market over the month of October, and a major job loss month as well. This had many concerned and wondering if the bonds will take a major rally over the next few days. As this was a tough month of October for jobs, it is unclear as to what November will be a hold.
All right, thanks so much, Maria. But let's get a check now on Asia markets. Asia Pacific markets fell today, tracking Wall Street declines on persistent concerns of lofty valuations in artificial intelligence stocks. So yeah, that's the picture right there in Asia, 1.19% big drop. And we're also seeing the same thing playing out in the crypto space there. Kospi, 3,953.1.81% down. Hang Seng Index, 0.92%, 241 points. Let's flip over to other parts of Asia that we track now. And the Nifty 50 just managed to hold on there in the green. That's the lone gainer with the markets we track in Asia, 25,526 points. There's about 7 basis points to close there. And the Shanghai Composite, 3,997 points, 0.25% down. So that's a picture right there with markets that we track in Asia and U.S. futures. But let's take it on to Europe now. A different topic now. No other business sectors running as hot as these days as AI, big data, and Google. One of the big players is announcing a major investment in Germany. For more now, I'm joined by Deutsche Welle's correspondent Lars Holter in Berlin. Great to have you, Lars. So what is Google planning?
Thanks for having me. Well, Google is expanding its presence in Germany. They haven't given any particular numbers so far, but we do know that the company is planning to invest between $91 and $93 billion this year alone, global that is, and they're planning to spend even more next year. And it's all on data centers and the entire infrastructure around those, including specifically, apparently, with regards to Germany. They're looking at investing in innovative projects to power their data centers using renewable energy, including waste heat. Now, Google has had a strong presence in Germany for years, with their main data center being located near Frankfurt. And while the company has acquired buildable lots in that area too, they're also saying they're having big plans for Munich and Berlin.
And what does this mean for the otherwise struggling economy in Germany?
Well, it's great news, and we're already hearing from government sources that they're celebrating this as a vote of confidence, and it is obviously. It hasn't been easy as of late to invest in Germany with all the problems here, high energy prices, which is a huge problem for energy-intense data centers. There's other problems, starting with bureaucracy, or think of the relatively high labor cost. So it is definitely great to hear that one of the tech behemoths, one of the Magnificent Seven, as they're calling these leading tech and AI companies, if they're investing here. However, there are also good reasons for it. Google knows, as much as the others do, of course, that Europe is trying hard to lower its dependence on the United States. The EU Commission has made life hard for US tech companies with their Digital Services Act and the Digital Markets Act. And just last week, some in the governing CDU party here have actually called for the continent to step-by-step move away from US cloud platforms in favor of a European cloud. Much of it would yet have to be established.
And how will Germany's economy benefit from the new Google data centers?
Well, that's tough. It won't benefit too much beyond the signal this investment sends about Germany being open for business. The problem is data centers are not really at the heart of a massive value creation chain. Of course, they need to be constructed and maintained, so there's a few jobs. But most of the investment will actually flow into the equipment needed, and much of that will not come from Germany at all. The chips needed in such data centers are usually NVIDIA chips, and according to some experts, they will cost as much as 60 to 70% of the total investment. And then once all the hardware is installed, data centers usually don't employ tons of people either. So there is really only a limited benefit with regards to, let's say, the local economy. However, at least we'll have more computing power here as opposed to abroad, and maybe that's the beginning of this effort I mentioned to move more infrastructure to Germany or Europe, for that matter, in an effort to not entirely rely on the US.
All right, thank you so much, Lars Holter. We're seeing the AI trade there driving sentiment in most of the markets. Thank you so much for that details there. Let's get a check now on what's playing out in the crypto market. And yeah, it's red. Mostly red on the screen today there. We see Bitcoin still struggling, trying to get above the 100,000 level, but we still see sell pressure, smashing it right back down below $100,000. Ethereum, 3,215. Will $3,000 hold? That's the big question now, 4.19% down. And just a few pockets of green right there with some coins. There's some alternative coins, altcoins, defying what's playing out in the market there. Let's bring in Olumide Adesina, our financial market analyst. Hello, Olumide. Great to have you.
Hello, Ladi. Good afternoon. It's a Red Friday.
Yeah, it's a Red Friday, and it's been a while. I've had you on the show. Welcome back, Olumide. But looking at the way November is starting off here, same thing for Nigeria's stock market, starting off, in the red with huge profit taking. Crypto market not looking so good. Bitcoin struggling, trying to get back above $100,000. Is this giving us a sign that November might be the month not to remember with most of these markets?
I think market technicians have been expecting some pullback because the market has been heated for too long, over leverage, and the optimism that President Trump would definitely boost rally across the market has made a lot of people blinded. And unsurprisingly, we're seeing Bitcoin cracking below 100,000, and that has really pushed many altcoins around support level. You look at Solana struggling to stay above $150. Looking at Ethereum looking like it's going to break below 3,000. So you look at year-to-date gate of Ethereum, for example, it's now negative. So Ladi, I think what pundits are now looking at is how far the rally, the pullback might happen. But I think there's a shift in the market right now. If you look at the crypto market, what is really trending now are privacy coins. You look at Zcash, for example, broke $500 mark some hours ago, and that really tells you how interest towards privacy coins are. Excitement around the meme space has plummeted after the Trump token underperformed. You look at Bitcoin, that has long been seen as a traditional asset in the space. It hasn't shown that edging capability over the long period you compare with gold. So I think you're looking at it from a long-term spectrum. Yes, long-term investors have a lot to smile about, but looking at it from a mid-short term, I think the pullback has been very painful, and that has really caused a lot of liquidation, particularly in the derivative market. This year, we've seen the world's liquidations, 20 billion at one point in October. Now we're looking at another billions this week. So that it's really a very awful red week as we speak.
Right, and looking at how Bitcoin, kicked off the year, is it safe to say all of that gains have been wiped out from Bitcoin for 2025?
Technically, yeah, but you can't really bet against Bitcoin, to be honest, because the fundamental support is still there. The U.S. government interest, the fact that traditional players like BlackRock still have influence in the space. But when you look at the market holistically, then you might be fairly right, because you see de-risking appetite in stocks to bonds, to even you look at the crypto market, and usually the crypto market suffers more. So yeah, it's safe to say that we might not see Bitcoin breaking the all-time high it did last month when it broke the 126 resistance. We might not see that this year again, but I won't want to bet against the Bitcoin bulls after what we saw early this year in April.
Right, and looking at Ethereum, do you think $3,000 will hold with this major sell-offs we're seeing?
I think one advantage Ethereum had compared to other correction is the fact that institutional players have increased buying pressure on the most popular altcoin. You take a look at Bitmain, for example. At some point, they hold about 5% of the total circulation of Ethereum. So while it's safe to say that we might see something in the nearest future at that level, I don't think that pullback would be extended like we saw where it went as low as 1,500, Ladi.
Right, definitely a lot to look out for. Major altcoins there trying to, get to new highs. We see the likes of BNB crossing over $1,000 for the first time, but that has weakened below $1,000. That's talking about the Binance token there. So I guess it's safe to say there's no cryptocurrency that's safe right now.
Well, I think privacy coins look like the hot baby right now. A lot of interest in that space. You look at the rally. Despite the correction, you look at year to date, I think for those that are really invested in privacy coins, they have a lot to smile about. But holistically, I think for altcoins, I think it's been doomed this year. Look at Solana, look at Ethereum, look at XRP. This year particularly, I think it's been not a very decent run, Adi.
Right. Well, thanks so much, Olumide Additional. We'll keep tracking to see how maybe a bounce, at some point to most of these markets. Thank you so much. Always great to have your perspective. Thank you.
Thank you so much for having me. Have a great weekend.
You too. And that's it. That's the TGIF trade right here. And, definitely we'll bring you more details, maybe a summary of what's played out in Nigeria's stock market. That's for tomorrow on the capital market. That's at 7 p.m. But thank you for watching Business Incorporated today. And definitely, I hope the losses don't get to you. Thanks for watching. I'm Ladi Williams. Bye for now.